Do you want to know how to increase your success rate in getting business funding from a bank or investor? If your answer is yes, then this video is for you. Do you know that a third of small business owners experienced having their bank loans rejected? This statistic came from the Funding Guide report, which was published in 2019 by Australian Small Business and Family Enterprise Ombudsman. According to the article published by Accountants Daily in August 2020, more than 1 in 4 businesses have been rejected when applying for finance over the past 3 months. The figure rose to 37% in regional Australia. The August 2020 Census Business Index found that nearly 4 out of 10 businesses believed it was more difficult to secure lending. This statistic came from the article that Accountants Daily published in August 2020. If you want to avoid being part of these statistics, watch this video until the end. It is full of tips that will help increase your chance when you need to get funding from banks or investors. Over the next few minutes, you will discover 4 essential tips. These tips could help to significantly improve your chance of successfully obtaining funding to assist in growing your business. Tip 1. I will discuss the 5 criteria that lenders use when they assess funding application for business. Tip 2. I will guide you through the 4 steps on how you can better prepare yourself and the business before applying for funding. Tip 3. I will walk you through the 12 steps involved in having a comprehensive finance health checklist. It will help to ensure your business is in good health for success. Tip 4. I will outline the business planning preparation and review process. Lenders and investors usually require a business plan before they could provide the funding. The research information used in this video is mainly based on the Australian Small Business and Family Enterprise Ombudsman and Scottish Pacific Business Finance data. Some information also came from business.gov.au, which is an Australian government website. Let's begin. Tip 1. Lending criteria. Knowing the lender's criteria before applying for funding makes all the difference to your success rate in obtaining approval. According to Australian Small Business and Family Enterprise Ombudsman, bank lenders usually use the 5 C's of credit. It is used to determine if the business can pay back a loan. Depending on the applicant's business need or financial position, lenders may not require all of the criteria outlined in this video. 1. Capital. Lenders look at the borrower's financial position, including assets, liabilities, net worth and liquidity. 2. Capacity. To assess if the borrower can repay the loan over a certain period of time, lenders may calculate various ratios to determine it. Lenders may use ratios such as debt to income or servicing ratio, which includes cash flow, revenue, expenses and other outgoings. 3. Collateral. Lenders reviews the security types that the business is providing. It may include reviewing property, land, accounts receivable as well as their age, location and various aspects of the security. 4. Character. Lenders will look at the business reputation and business owner's reputation, including their credit history. Lenders may consider various factors such as loan repayment history, general savings history, tenure at their work and credit ratings file. 5. Conditions. Lenders will review how the borrower will use the money, trading ratios and determine if they have security. Lenders take into consideration other external factors such as the state of the economy to determine the loan conditions. To increase the chance of small businesses to secure the funds, they need to prove their creditworthiness. It involves working with advisors to get their business finance ready. The advisors could help to produce a comprehensive business case for investment, in pursuit of growth and success. According to Australian Small Business and Family Enterprise Ombudsman, businesses should consider professional advice as a business investment, rather than a cost. It is this mindset that can help your business to succeed. The biggest barrier for small business growth is access to finance, according to Australian Small Business and Family Enterprise Ombudsman. Getting the business to become finance fit before applying for funding makes all the difference to your success rate in obtaining loan approval. There are 4 steps in the funding preparation checklist. I will take you through the 4 steps to help you become better prepared when applying for business funding. It will help to boost your odds of getting a business loan approved. It may also assist in reducing your riskiness factor from the lender's perspective.
Step 1.
Part 1. Review your business accounts, and get it in order. Separate personal and business finances. Get into the habit of separating your personal and business finances early. It will provide lenders and investors with a much clearer picture of your financial position. Part 2. Tidy up the business financials and get it in order. Business owners should generate various financial reports, such as a report that shows earnings before interest, taxes, depreciation, amortization, profit and loss, balance sheet and cash flow statements. Separate any once-off or extraordinary expenses. Lenders use these financial reports to assess if you can repay the funds borrowed. Part 3. Financial commitments. Compile a list of all your financial commitments. By having all your commitments in a simple document where you outline all your commitments can help with funding applications. Part 4. Check Australian Taxation Office record. Check the Australian Taxation Office record for your business to ensure everything is in order. Check that you are meeting all your obligations, such as paying payroll tax on time. Part 5. Review bank statements. Lenders look at bank statements closely. Ideally, during the most recent 6-month period there were no default payments, accounts were not overdrawn and there was minimal discretionary spending on the bank statements. Step 2. Prepare, write, review and update your business plan. According to Australian Small Business and Family Enterprise Ombudsman, it is recommended that you use a good accountant with strategic experience. Rather than only seeing an accountant a few times a year during tax time to receive some advice. You need to be aware of the various factors that influence and affect the odds of getting your business loan approved. According to Reserve Bank's Access to Small Business Finance report, published in 2018, around 1 in 5 Australian small businesses reported finding it relatively difficult to access finance. I will walk you through the importance of having a business plan. I will outline how you can have a good business plan to boost your chances of getting approved for a business loan. Part 1. Show clear goals. It helps lenders, investors and you to clearly see your goals and achievements. A good business plan outlines goals and the actions required to reach those goals. The plan should be a living document that shows the business progress. It should include market analysis, historical financial performance against forecasts and future periods financial forecasts. Part 2. Financial reports. Include profit and loss statement, balance sheet and budget reports. Part 3. Cash flow forecast. Prepare a cash flow forecast. Then compare what you said you would do against what you achieved. It should include a cash flow statement, comparing actuals with budget and forecasts. The historical statement should capture the 7 cash drivers, namely, revenue, operational expenses, overheads, debtors, creditors, inventory, and gross margin. Part 4. Debt servicing. When servicing a debt, use the budget and cash flow statement to determine the business break-even point. It is useful to assess what it costs for the business to remain operational, what revenue the business must generate to turn a profit, and what cash is available to service the debts. Step 3. Finance fitness check and credit worthiness assessment. It is important to find the right financing solution based on your circumstances. It is necessary that your advisor assesses your financial position and your business situation. Part 1. Get a credit report. There are online providers who can supply credit reports for free. The report shows personal property securities register information. It may include old and expired equipment leasing data, which the applicant can update. Part 2. Create assets list. Many business owners may feel that they have nothing to use as security. By having a list of every piece of equipment, tools and furniture you have, can all add up. Part 3. Online reputation. Lenders can access so much information about you and your business, including social media such as Facebook. Be aware that lenders may look through the business website, business Facebook page and the business owner's personal social media activities. It is a way the lender is able to assess one of the 5 C's, namely, character of the business owner. Part 4. Tidy up issues. Before seeking any funding, tidy up any outstanding issues. It will help to give yourself the best chance of obtaining approval. Part 5. Multiple finance applications. When you have multiple finance applications, it can negatively impact your credit rating. Part 6. Credit Rating and Australian Taxation Office. Check your personal credit rating, business credit rating and your Australian Taxation Office portal to ensure everything is in order. This is important to avoid any surprises when the lender checks your credit history. Part 7. Personal Property Securities Register Review. Carefully review the Personal Property Securities Register by doing a register search, as lenders will check it. It is important to review it and your advisor can help you do this. Prepare a statement showing the reason for any registrations. Any out-of-date or incorrect entries can impact the business credit application. It can also limit the security you can offer to another lender if you are applying for additional finance. All out-of-date registrations should be corrected. It will help give an accurate picture of the business. You may seek legal assistance, as required. To rectify any issues in the report, your advisor can help correct it. Step 4. Assess if you need funding. To find the right financing solution based on your circumstances, it is important that your advisor assesses your financial position and business situation. To determine the different types of funding options that are appropriate for you will depend on your situation. It depends where the organization lies within the business life cycle and what is important to business owners at the time. Part 1. Funding requirements. If you require some funding, having the right type of funding for your situation can really make a difference to achieve business growth. In some instances, it may be difficult to solely rely on sales to achieve success. Part 2. Business needs. Determine your business need. Depending on your needs, you may consider to borrow, seek funding from investors or self-fund your business operational requirements. Part 3. Cash urgency needs. Assess if you require urgent cash to address a short-term issue in your business. Determine if you require some funding instead, which allows you to meet your needs for the ongoing operations of the business. Part 4. Debt serviceability. Determine if you can service the debt. When assessing the serviceability of the debt, it is not only taking into consideration the funding amount. It should be the total cost, including fees and charges. Part 5. Mental health matters. Your mental health matters. The state of your mental health is critical to the success of your business. To give you some peace of mind, it is important to have a business plan and the appropriate funding in place. Part 6. Giving guarantees. Understand what giving a guarantee means for secured and unsecured loans. I will outline the 12 steps involved when going through the finance health checklist. I will walk you through the checklist to ensure your business is in good health for success. It is important to get your business finance health checked to ensure you remain financially fit. It will help you to stay on track and be in good shape to successfully achieve your company's goals and business plan objectives. Before applying for funding, go through the finance health checklist. It will help to improve your success rate in getting your funding application approved. Step 1. Get business accounts in order. Step 2. Create or update the business plan. Step 3. Review the balance sheet and profit and loss reports. Step 4. Create monthly cash flow forecasting. Step 5. Ensure a clean credit rating history file. Step 6. Check the Personal Property Securities Register. Step 7. Sort out Australian Taxation Office affairs. Step 8. Lodge the pay-as-you-go and business activity statement on time. Step 9. Understand your business needs. Step 10. Assess if you require business funding. Step 11. Decide which funding option best suits your business needs. Step 12. You are ready to apply for funding. In this business planning section, I will take you through the tips on how to create, update and review a business plan. It will help you to remain on track in successfully obtaining funding and to meet your business goals. Business planning is an ongoing business activity. As your business changes, many of the strategies in your plan will need to evolve to ensure your business is still heading in the right direction. By having your business plan up to date, it can help in keeping you to remain focused on where you are heading. You can make further adjustments to the plan as your business objectives changes. It will help to ensure that you are ready when you need to adjust your company's strategies and whenever you require business funding in the future. A business plan provides direction, keeps you on track, and usually a requirement when you seek finance. Depending on your business type, your plan could include the sections outlined in this video. Part 1. Business Summary. A one-page overview should be written after your business plan is finalized. Part 2. About your business. It is usually referred to as management plan or operations plan. It covers details about your business, including structure, registrations, location, premises, staff, and products or services. Part 3. About your market. This is the marketing plan. It should outline your marketing analysis of the industry you are entering, your customers, and your competitors. This section should also cover your key marketing targets and your strategies for delivering on these targets. Part 4. About your future. This section covers your plans for the future and can include a vision statement, business goals, and key business milestones. Part 5. About your finances. The financial plan includes how you will finance your business, costing, and financial projections. According to business.gov.au, get some help if you are not confident in completing the business plan yourself. You can seek the help of a professional, such as a business advisor or accountant, who can look through your plan and provide you with advice. Part 6. Determine who is the business plan for. Does your business plan have more than one purpose? Will it be used internally or will third parties be involved? Deciding the purpose of the business plan can help you target your answers. If third parties are involved, what are they interested in? Do not assume that they are only interested in the finance part of your business. They are likely going to look at the entire business as a whole. Part 7. Taking on a mentor or a business coach. Participating in mentoring or coaching programs can help you to develop a greater understanding of business processes and practices. It can help to provide you with the skills you need to grow and improve your business. Our done-for-you business planning service is based on proven methodologies and award-winning cloud-based software tool. It can help eliminate manual processes and key person risk in your organization, increase data transparency among your teams, and create more efficiencies within your business. Click on the link in the show notes to download the free Business Funding Essential Guide, which includes free business funding checklist. To find out how we could help you, reach out to us today for a no-obligation free consultation. Click on the Contact Us link in the description to book a time. Disclaimer. This guide is not intended for use as a source of legal, business, accounting, or financial advice. All readers are advised to seek services of competent professionals in legal, business, accounting, and finance fields. The information in this video is for educational purposes only. If you like this video, share the love by giving it a thumbs up. Hit the subscribe button and the notification bell to receive more like it in the future. Thanks for watching.